the setups. Okay, and today we're going to get into management. What happens when you get into something that's at all-time lows? How do you know where support is? What if you get into something that is into a big void area and it's not reasonable for it to rally maybe another 100%? So how do we manage when there aren't clear targets? That's what we'll get into today, okay? But let's go ahead and get started. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for September 17th, 2019. SPY up 0.26 and Qs up 0.41. Coming into today, bullish on the Qs and SPY, expecting that sell-offs will get sold. We're setting up a bit of a buy setup here. Okay, market looks higher still. Okay, we're definitely a couple setups at least away from switching to a bearish bias. For now, going into tomorrow, gonna remain bullish just like we were today. So nothing too different here. We are breaking out above this range. There's gonna be some resistance from the previous all-time highs that the SPY just set last week. Okay, but into that area, we may slow down a little bit. But overall, bullish on the hourly, bullish on the daily, bullish on the weekly, bullish on the monthly. Okay, so bullish across all time frames here. Doesn't mean that we necessarily have to skyrocket tomorrow, but expect that sell-offs will get bought. All right, so let's take a look at today's plays. We have one long and one short here. And what I want to kind of do as an exercise here is talk about the management for something like this. Okay, let's say you end up shorting this, okay, and it was great. I asked the room, is this a pro gap or a novice gap? And someone, she gave us the perfect answer, which is it is definitely professional because it is right off the 20 MA. That's about as good an answer as you can get. It's not extended away. Now, if you wanted to make the case that this previous gap was a little bit novice, then you could, because it was multiple bars down and extended away. However, this one, right, definitely going to be a professional. What does that mean? That means I'm going to be playing with the gap. That means it's a gap down. I'm playing with the gap. Okay, so it's going to be looking for an opportunity to short. Okay, so let's go ahead and look at how this set up here. Okay, there were the numbers. Okay, I'm on Pacific time here, so the numbers that you see there come from this right here. Okay, so BE short 335 by 346, so about 11-cent stop. I did get filled at 331, so a little bit late. It was on an uptick. That's fine. Still gave us plenty of room here. Okay, so we were looking for a retest of the lows right here. We got it. And I told the room, go ahead and take half there right when we broke down. So this is pretty standard procedure. Okay, you know where the entry is. You know where the stop goes. That's where if it breaks above 346, we will be out. Okay, if it goes against us. And in this case, because it was a tight stop, because I didn't really like the size of the bars, I said just take half. Okay, so I do give you ahead of time when it's triggering what the target is going to be. Okay. And then when we get there, depending on how it gets there, how it's moving, right, sometimes it's not really the best thing to do to trail it because, you know, it may be moving pretty quick. You may give back a lot. One that made me feeling a little bit regretful initially is that I did not play this MAS short. You know, on something like this, when it bounces like that, right, that's a 50-cent bounce just in that tail alone. So sometimes when you get those kind of drops, you do want to take it. In the case of the BE, while not quite as rewarding or dramatic as that BE drop, we did get a bit of a wide range bar here with some volume pickup. I said to take half. We trailed as we got into new lows, right? We took another piece there. Okay, because what happened is that it hit just about 2 Rs there, okay, at 311, just about 2 Rs, okay? So that's what I kind of want to bring to your attention because when it's here, right, we don't really know when it's at 311, let's say, we don't really know is how far this is going to go. Okay, here's the daily chart. Here is the weekly chart. Okay, here's the weekly chart. Okay, since it has been, since it IPO'd. Okay, I'll go ahead and take this off because we don't need this anymore. All right, and so when you're at all-time lows, what does that mean? Do you just wait until it gets to zero? Do you wait until the end of the day if it's a day trade? Like, what can you do? Okay, and so what I recommend to do, right, is use a combination of risk, like what is your risk target, a risk target, and then trail. Okay, so how was that kind of put into practice, right? Is that we were up 2 Rs here. We went ahead and trailed it down to the last quarter. Okay, only the last quarter, and the last quarter was going to be managed off of the hourly. Okay, as if it were a runner, as we do with a lot of gaps. Okay, so the last piece didn't make as much, right, but trailed out over 323. I think that was a fine trail. We gave it a chance to keep going because I don't think anybody really knows that 310 is gonna be the bottom. There's no reference point whatsoever. That's, as it stands going into tomorrow, gonna be the all-time lows, right? So what do, right? We trail the play when it's in our favor. 2 Rs is a good place to look for, to not let that money, right, slip back to the market, right? Go ahead and lock that in, right, and then trail the rest. And so we ended up trailing it over the hourly, which ended up being 323, right, and trailed right there. Okay, so that's what I recommend doing. Sometimes you're gonna be long a play, it's into all-time highs. Maybe there's no reference, and then there's no reference point there, or maybe you're in something that's at all-time lows, right? So once it gets working, right, you want to, in between 1 to 2 Rs, not a bad place to lock some in, right? And then that kind of makes it a free play, almost like a free lottery ticket, right? We'll see how far this wants to go. Ended up 310, wanted to be the bottom. That's fine. Okay, let's take a look at another example here. Okay, this ACRS was given as a play here, all right, over 175 by a stop with a stop at 160. Okay, now this isn't quite void, right, as you saw in the case of the BE, but we are into an area where we had a very fluid move down, and there's a lot of room to run up on something like this, right? So how do we manage something like this? Okay, because there's a lot of room for potential for this to move up. So let's say you play it 175 by 160 as it was given, okay? And you get to the highs here, you're up a little over an R, you can take some, okay? Now, what would it take for us to get to 2 Rs there, just like we did maybe on the BE, okay, would be up 30 cents from 175. So if we get to 205, look to take another piece and then trail the rest, right? Because this is in a very, very nice uptrend, right? Very nice uptrend, maintaining the uptrend. Okay, now we're up here. We just broke beyond 205. You take another piece and you can manage the rest, all right? So if you want to manage on pivots, if you want to manage off of the hourly there, hourly gets you out at 192. Okay, so you're not a part of this last piece, this last drop here. Okay, if you want to manage underneath this base, that's fine. That's still a locked in winner. Okay, so sometimes the targets are not going to be so clear, right? This has just kind of been grinding lower in this area. We had a pretty swift drop down, right? Maybe next resistance goes as far as 230, right? And sometimes we'll get these kind of gap ups into void area. I think one of them that we saw today was the LXRX, for instance, right? So if you're in this LXRX, for instance, and I don't think this actually set up because I was watching this morning pretty closely. I didn't see any setups. But let's say you're in this LXRX and you get it and it starts to go, right? Is it reasonable that this gets back to $4, above $4? Probably not. Is it realistic that it's going to close the void, right? Get all the way back to the price that it gapped from, right? That would be moving up almost another 100%. Probably not, right? So what are you left with? So that's why You can see that that's what worked best on the BE. Now, if you just took it 2R all or nothing, that actually would have worked the best, but I do like to give them a chance to run, okay? And so in the case of something like the BE, if we want to continue to go, we want to put it in an all-day trend, we really want to make a run for $0, probably not going to happen, right? That way I'm in a position to take advantage of it, right? So I think 2Rs is a pretty good place to start to look to trim down to just the runner. Okay, if the runner wants to go whatever 4 or 5Rs, right, then you'll still be in it, but then you also don't have to worry about, you know, giving the whole thing back. Because look, if you were, say you were in this ACRS, right, and you were thinking, well, you know, I'm in it and I'll just, you know, come back at the end of the day and see where it goes, you only made 5 cents, right? Basically a third of an R when there was 2Rs to be made, more than 2Rs to be made, right? And then in the case of the BE, I guess it's, yeah, basically back at break even when there was 2Rs to be made. Okay, so just something that you want to have a plan for, because usually we look for support and resistance as targets. If you're long something, you look for the next resistance area. If you're short something, in the next support area. But sometimes those areas aren't so clear, right? Or what's realistic, like in the case of the LXRX, is not going to come into play today. Very unlikely. Now, could you kind of dig or climb back up into a good amount of it? You always could, and that's the kind of thing that you want to make sure you are in a position to take advantage of, right? One other thing, I think, before we wrap up here, so that's, I just want to talk about management there. One more thing on the transition A plays here. I just wanted to show you this because this was a transition A on the intraday, also a transition A that is set up now on the daily. Okay, transition A is when something's in a downtrend. We're not buying the bottom. We're letting it set up a higher low and then a higher high, and that gives you permission to play it long. So it's transitioning. You want to see a rising 20 MA. So you can see the way in which it's done it here on the the daily chart here, down a lot on the weekly and the monthly, and then on the intraday here is the similar picture. Down, 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 puts in a base, 20 MA starts to curl up underneath, and you can play it as a breakout. Okay, these continue to work really, really well, and I just want to continue to bring them to your attention. You know, maybe you're experiencing the same thing I am, which is there are certain things that I gravitate towards that I do with almost no hesitation, right? When the BE came up, and you know, finally we got this put up enough bars here for this to consolidate. I was like, we're gonna play this, okay? Start to type it in the room, start to put in my order. There's no hesitation. But sometimes when it, you know, comes to building out your versatility, adding to your toolbox, right, we can sometimes be a little bit slow to start to really commit to a new strategy and a new approach. It's not that this hasn't been taught to me since day one. It's just when it came to playing trend plays, right, my focus was always on playing in the direction of the trend. And these transitions are something that I think, you know, working to get more comfortable with. And if it was something that wasn't working day in and day out, that I'm seeing offer 3 and 4R plays, then I wouldn't, you know, really push myself to start playing these. But, you know, what we want to see on these, rising 20 MA, curling up underneath, and especially something that is down a lot on the longer term time frames, right? So that they are ready to potentially exhaust the selling and transition higher, okay? A very similar one that we had, right, was that MDP, which was, here it is, had the gap down, and then after gapping down, set up this base. Really the continuation came, I think, the next morning, but even this play in itself, not too bad. So visually, you can really see the similarities. MDP, set up the base at the bottom, transition higher, okay, and then today the SCOR, okay. So hopefully that stands out to you. That's kind of the first thing that needs to be there in order for us to kind of develop the strategy, because you're going to have to be able to find it in real time and recognize it in real time, right? We have to be able to recognize it not after all these green bars come up, but when it's starting to do this. And so it really has to be something that can stand out and be easily recognized, right, for us pattern traders. And so yeah, this transition A, just something that really got to do a better job of training my eyes for. Definitely recognize it. I think there's just maybe a comfort level that's not there quite yet. But I just wanted to bring it to your attention because I thought that was really, really nice. Did fit what we were looking for. Okay. All right. Hope you did well today. All right. We'll see what the market brings us tomorrow. Still going to be bullish going into tomorrow. Not that different from today. Just expect sell-offs to get bought. All right. And then I'll talk to you tomorrow. All right. Have a good evening. Hope you did well today.